In this section, we look into how we are leveraging Islamic finance principle for environmental and social impact, primarily through the lenses of impact investing and blended finance. Impact investing is defined as an investment that aims to achieve positive social and environmental impact alongside financial returns. Islamic finance, with its principle of prohibiting interest, promoting risk sharing, requiring tangible asset backing, has a significant role in impact investing. Both mechanisms, impact investing and Islamic finance, can enhance growth and reduce poverty through their ethical alignment and share focus on positive outcomes. By integrating the two concepts, a financial system can be created that not only complies with Sharia law, but also drives significant social and environmental benefits. This synergy attracts a diverse investor base and fosters a more inclusive and innovative investment landscape, effectively addressing global challenges. The Islamic Development Bank and the United Nations Development Programme Global Islamic Finance Impact Investing Platform is a leading example how blended finance can be effectively applied within Islamic finance. It combines Islamic finance principle with impact investing strategies to attract private capital for projects aligned with sustainable development goals. By de-risking investment and creating innovative financing structures, GIFIF enable the funding of projects that address global challenges such as poverty, clean energy, and financial inclusion. This platform underscores the value of collaborative efforts in scaling ESG-aligned investment in Islamic finance. Traditionally, impact investing was primarily focused on equity investment managed by small private equity or venture capital fund managers with a strong social mission. The focus on impact investment was on microfinance and innovation targeting the bottom of the pyramid, aimed at providing them with access to financial services and opportunities for economic development. However, the landscape is evolving. As the field has grown, there has been a notable shift towards broader areas of social and environmental impact. Islamic finance is increasingly channeling investment into sectors like affordable housing and green energy. These areas not only promise financial returns, but also contribute significantly to social and environmental sustainability. Affordable housing projects help to address the pressing need for shelter in underserved communities, while investment in green energy promote renewable energy sources and reduce reliance on fossil fuels. At the same time, there's a growing interest in blended finance within the realm of Islamic finance. Blended finance involves the strategy use of development finance, philanthropy funds to mobilize private capital flows to emerging and frontier markets. By combining different types of capital with distinct objectives, blended finance structures can mitigate risks and enhance the attractiveness of investment that might otherwise be overlooked by purely commercial investors. This approach hence aligns well with the principle of Islamic finance, which emphasizes ethical investment and social responsibility. Blended finance not only supports the financial inclusion of marginalized communities, but also leverages private sector capital for sustainable development projects. This synergy enhances the capacity of Islamic finance to contribute to broader socio-economic goals, making it a powerful tool for achieving impactful and sustainable investment outcomes. Islamic finance, therefore, inherently aligns with socially responsible investment principle. It has a great potential to drive socio-economic development, but it does so with a lower risk profile, but due to its inherent principle of risk sharing and ethical investment. This arises due to the emphasis on the tangibility of the assets, partnership and equity style financing, and profit and loss sharing. These principles ensure that investment are not only ethical, but also contribute to real economic activities, share prosperity. Profit and loss sharing aligns the interests of investors and entrepreneurs, fostering a collaborative approach to solving social and environmental issues. This approach positions Islamic finance as a sustainable mechanism for expansion into impact investing, where the focus is on generating positive social outcomes alongside financial return. By providing clear and accessible pathways for impact investors, Islamic finance can effectively mobilize capital towards projects that address urgent social and environmental challenges. In this regard, the regulatory environment is crucial. To fully harness the potential of Islamic finance for impact investing, regulators need to create a more enabling environment. This includes developing supportive policies, ensuring transparency, and providing incentive for impact-driven investments. A robust regulatory framework will help to build investor confidence and attract more capital to the sector. In short, with the right regulatory support and innovative financial mechanism, Islamic finance can drive impactful investment that enhance growth, reduce poverty, and address global challenges.